Hey, by the way, Mike Eppel joining us now with business. We're getting so many comments this morning about rental prices, especially skyrocketing in this city, and the price of housing, of course. And now we're talking interest rates this morning.
We are, Kevin. You know, if you buy a property in the GTA right now for rental purposes, what do you have to charge in rent to actually cover the mortgage payments? That's part of the reason why rental prices are going up. You know, from an investment standpoint, it almost doesn't pay to own a property or to buy into the market for something for a rental property. It's a vicious cycle that we are seeing right now, certainly in the Toronto housing market, and interesting dichotomy as well between the Canadian and U.S. governments. You look at the policies and issues right now, whether it is interest rates, taxes, environmental regulations, fuel economy standards, also, tariffs, trade. We've got very different policies right now between the Canadian and U.S. governments. And interest rates are at the top of that list right now, considering the fact yesterday interest rates went up in the States by 0.25%, expected to go up 2 more times this year, if not more, and then more into 2018. While our Bank of Canada sits on the sidelines and says, well, our economy's not strong enough, we can't afford higher interest rates. That might actually help cool off the red-hot real estate market if they were to tighten policy just a little bit, but that's not going to happen anytime soon. The fallout from this is actually a sigh of relief from the investment side of the business community, as the U.S. Central Bank not being overly aggressive with interest rates, and that's sending world markets sharply higher so far this morning. We're coming off gains of more than 100 points each for the Toronto and New York stock exchanges yesterday. More buying expected today. You're looking as well at the Canadian dollar, which is coming off its best one-day rally against the U.S. dollar in about a year's time, up by a full cent. As the U.S. dollar has cooled off a little bit, the price for gold is way up this morning by about $24 per ounce, and the price for oil, it's north of $49 a barrel, so getting a little bit more expensive after plunging to a 3-month low just earlier this week. Now, are more homeowners actually thinking about selling? You've got a high price being offered for pretty much any type of property right now in the GTA. The Canadian Real Estate Association, with their monthly numbers in yesterday, saying that home listings are starting to climb a little bit, up 17% for the month of February. So that could, if we've got more listings, maybe alleviate some of the upside pressure on prices. We'll see if it actually works out that way. Big Canadian bank stocks in the midst of a big rally on Bay Street yesterday. The bank shares traded lower as they're under scrutiny by Ottawa now about some questionable sales tactics being alleged by some of the employees in a CBC report. And Canada Goose goes public on the Toronto stock market today. That's going to be very heavily traded right off the bat this morning, as the luxury retail brand sold some stock yesterday at a higher than expected price, and it is expected to be a high flyer today on both Bay and Wall Streets. Kevin, back to you.